Hello, gentlemen. My name is Greg Michaelowski. Today's date is January 12, 2015. I take a technical look at the euro versus US dollar. The first thing I want to point out is on the monthly chart, this 1.1743 level, that's this line right here, the second dashed line from the bottom. That level represented the transition price from the ECU into the euro going back to January 1st, 1999. Some people call the accounting level for that currency pair. And as you can see from the introduction in January of 1999, most of the time spent all the way up until around 2003 has been below that 1.1743 level. In fact, it wasn't until November of 2003 that the market started to move above that level and stay above that level. And back in November of 2005 and November and December, there were 10 trading days during these 2 months where the price actually traded below the 1.1743, but that was only 10 trading days over this time period going back to 2003. That's a long time, a lot of days where the market has not traded below the 1.1743 level. In last week's trade, the market came down to a low of 1.1753, within 10 pips of that 1.1743 introductory level, and found support buyers against that level. In this week's trading, if we're going to go lower, we need to get below that 1.1743 and stay below that level. Stay below it for more than a few days at a time like we did back in 2005. We need to develop some value below that level in order to move lower. The problem is the market's had a long way to the downside already, and in last week's trading we went through a key level at the 1.1876 level. That was a low price going back to 2010. That is of significance to me because it also represents a low price since the 2008 debt crisis. So it took all this time for the price to get back below the 2008 debt crisis for the euro versus US dollar. And through that time, we've had a lot of turmoil within the Eurozone from an economic standpoint. So I consider that somewhat significant, getting below that level finally. And if we can stay below that level, that'll keep the bears in charge. And ultimately, we're going to get below that 1.1743 level if we can stay below the 1.1876 level. That's the big if. Now, in trading here today, we answered that if by finding resistance against the 1.1876 level. In fact, the high for the day came in at 70, just below it, about 6 pips below that level. So we're keeping that lid on at that level, but we still have this floor that we need to get through at the 1.1743 level. That's this line right here. In between, we have the 100-hour moving average, which is the blue line in this chart, which comes in at 1.1832 currently at the moment. We trade a little bit above it here in the New York session, only to come back down below it. So we have one close above that level, and the rest are trying to keep below that 100-hour moving average. We did spend some time above that 100-hour moving average. That's the first time since this day right here, and really the first time for more than a couple hours, going all the way back to December 17th. Now, obviously, that 100-hour moving average is at a much lower level than when it was at December 17th, so it's an easier hurdle to get above. But nevertheless, in a trending market, if you can't get above that level, the bears remain in control, and that's what we're seeing right now in the euro versus US dollar. So 100-hour moving average, 1876 level, 1743 level. Those are the key levels that you got to watch in the euro versus US dollar and trading this week. Use those levels to define and limit your risk, and you'll be okay. My name is Greg Michaelowski. This has been a look at the euro versus US dollar. Good fortune with your trading. Bye-bye now.